And this we have already discussed, the money market institutions or the players or the major players of the money market. So it is not like we have exactly these 5 players, there may be many more players, but they are the major players of the money market. So first of all, we have the central bank. The central bank of the country is the pivot around which the entire money market revolves. It acts as the guardian of the money market and increases or decreases the supply of money and credit as per the interest and stability of the economy. So RBI actually does not do any kind of transactions directly. Okay, they have agents or dealers to do their transactions for them, but in effect the central bank is the one organization who is controlling the entire money market by variations in the bank rate and various open market operations. Okay, second is the commercial banks. Commercial banks also deals with short-term loans which they lend to businesses, and they also borrow from businesses from time to time. Mostly, they are using money market instruments to maintain their CRR or SLR rates. So they also discount bill of exchanges, they also discount treasury bills, lend against promissory notes, and through advances and overdrafts. All of this in the money market. Then you may be having non-banking financial intermediaries. So besides the commercial banks, there are also these non-banking financial intermediaries. So these exactly do not function like a bank, but they are still financial intermediaries which lend short-term funds to borrowers in the money market. Such financial intermediaries are savings banks, you can have investment house, insurance companies also, mutual savings bank, pension funds, building societies, etc. Then you have discount houses and acceptance houses. So discount houses, you will find them in, you see in developed money markets, private companies operate discount houses. The primary function of a discount house is that they discount bills on behalf of others. So in turn, they form the commercial banks and acceptance houses. Along with these discount houses, there are bill brokers in the money market who act as intermediaries between borrowers and lenders by discounting bills of exchange at a nominal commission. Then you have acceptance houses also. The institution of acceptance houses, they had developed from bankers who transferred, in the early 19th century and early 20th century, there were bankers who transferred their headquarters to the London money market. Okay, this is where the acceptance houses have actually originated. So what they do is that they act as agents between exporters and importers and between lenders and borrower traders. They accept bills drawn on merchants whose financial standing is not known in order to make the bills negotiable in the London money market. So by accepting a trade bill, they guarantee the payment of bill at a maturity. However, their importance has declined because you see the commercial banks have undertaken the acceptance business. So you see, even though you have acceptance houses, but most of these commercial banks are also doing this particular, performing this particular business. Then you have primary dealers, who is another important player of the money market. Primary dealers are registered entities with the Reserve Bank of India, who have the license to purchase and sell government securities. So as I told you, it was mentioned that central banks do not directly deal in the money market, but they will deal through the primary dealers who are their registered, you can say, entities. So they are registered who, entities who buy government securities directly from the RBI, okay, aiming to resell them to other buyers, okay. So in a way, you can say primary dealers are the creators of market for the central bank for the government securities. So you see the primary dealer system was introduced by the central bank itself in the year 1995. So they were created to promote transactions in government securities market. A facilitating arrangement is essential for selling of government securities, as government is the single largest borrower in the market who borrows through the issue of securities like treasury bills and bonds. The RBI, instructs the primary dealers to have a minimum turnover ratio, bidding ratio, underwriting ratio, etc. Okay, so primary dealers are active in the stock market also for enhancing the trading of government securities.